Jeff Seeker's with us.
Save him.
Yeah, you're going to bail me out of this, Jeff. You really are. Let's talk
I
money.
might burst into tears, too. So it's a very emotional day. Yes.
It is. It just
Absolutely.
is. The market's getting nervous. I get the impression the market's getting very nervous about what could be a 100 basis point rise in interest rates from the Fed. What say you?
I think that's exactly what the market is nervous about. And keep in mind, a couple weeks ago, everybody was thinking it's going to be 50 basis points, maybe 75 basis points. Now you have the 100 basis point talk. Now, when you have Fed funds at about 2.5 and inflation at 8.3, what you're going to have to see is you're going to have to see the Fed funds rate go up a lot. And for that to happen, there needs to be almost draconian steps taken by this Fed in order to accomplish it.
That would be... Go ahead.
Well, my question is, it takes some time. There's usually, they say, a 9-month lag for the Federal Reserve hikes to take effect on the economy.
Right.
So if we get these constant and repetitive increases, let's say the terminal rate is 4.25%, as Goldman Sachs says, at the end of the year, what does that do to the economy in 9 months?
Well, that's the decision the Fed has to make. The Fed has to decide whether they want to crush the stock market in order to save the economy and end inflation. Essentially, inflation is a Ferrari at 200 miles an hour. They've been trying to pump the brakes, and in order for them to do this, they may have to slam on the brakes, and the market is not going to like that.
That's a tough signal to be delivering to the market. And so is what FedEx said last week, pointing towards a global slowdown. And they report that actual earnings this week, not going to be pretty, is it?
No, I mean, FedEx, that not only did they warn, but they also withdrew all their annual guidance, which means they don't have any optimism about a quick recovery. So when you have a company like FedEx, keep in mind, FedEx is one of the only companies that touches virtually every company. Small companies, medium-sized, large companies, they touch every company. They have their finger on the pulse of the economy of businesses, small businesses and large alike. So they're telling us that this recession is not going to be short-lived, it's going to be longer term, and that scared the daylights out of this market.
You wouldn't be touching stocks at this moment?
No, at this point, I would not. I mean, we're going to get rallies, and I do think that Jerome Powell might even talk like, as I've said before, talk like a hawk and act like a dove. That may very well happen, but I would wait, because what you're going to see is you're going to see a lot of this leverage that's in the market needs to be unwound, and that's going to take time.
And it's going to be painful, too.
Absolutely.
Jeff, thanks for being with us. Always a
Thank you,
pleasure.
Stuart.
Thank you, sir.